by STAN CHOE, AP business writer. New York, AP, Wall Street is tacking a bit more onto its stupendous surge from a day before in Friday morning trading, keeping it on track for a strong gain for the week. The S&P 500 was 0.6% higher a day after soaring 5% in what was its best day since the spring of 2020. The Dow Jones Industrial Average was down 41 points, or 0.1%, at 33,674, after surging more than 200 points a day earlier, while the Nasdaq composite was 1.2% higher, as of 10:21 a.m. Eastern Time. Markets got a boost after China relaxed some of its strict anti-COVID measures, which have been hurting the world's second-largest economy. Hopes for more economic growth from China helped not only stocks but also oil prices to rise, with U.S. crude gaining more than 4% to top $90 per barrel. Thursday's huge rally for Wall Street came after a report showed inflation in the United States slowed by more than expected last month. That raised hopes the worst of inflation may have finally passed and that the Federal Reserve can take a less aggressive path on raising interest rates, though analysts and economists cautioned that high inflation could remain stickier than expected on the way down. Hikes to such rates can cause a recession and drag down on stock prices. Just as important as how bad inflation is at the moment is how high you households see it being in future years. That's because too high expectations could trigger a vicious cycle where people accelerate purchases and make other moves that only inflame inflation further. The Fed has said it follows such expectations closely and that preventing such a doom loop is one of the reasons it has moved so aggressively on rate hikes. Inflation expectations have been relatively high recently, but not so much as to trigger panic at the Federal Reserve. A preliminary report on Friday suggested households aren't moving those expectations very much.